I've got these screeners that I have created, and I've got some beta screeners. And beta picks number 2 screener, this symbol was identified just last night. It was Wendy's. And I've been in and out of Wendy for years, but when it comes up on my screener, you can see it right here. It's trading at $23.60 right now. I know that it's ripe. So if we take a look at the chart for Wendy's, I've actually got a 2-year chart up. Remember, when we're selling premium, what do we like? We like boring symbols, right? Well, how boring can you be? This hamburger joint, Wendy's, there was one moment where it got kind of excited and it went up $1 or $2. It went up $3. But for the most part, for the last 2 years, it's been stuck between $20 and $24. This is the most delicious stock that we can think of for our type of trading, right? Because we make money on time passing by on these boring symbols. So if I come in a little closer, you can see that. And last week we talked, or 2 weeks ago, we talked about reversals versus retracements. So the retracements are happening, as you can see. We just hit a retracement up here at its level of resistance, and we're on our way down. So this is a perfect opportunity for us to do some of our premium trading. So it's on its way down. So we start off this thing. I'm going to give you guys some insights here. I'm going to start with, I'm going to put a slide up here. First, I'm going to make sure you guys know that what I'm talking about when I'm talking about these trades is for educational purposes only. You can read the terms and conditions here. I don't want anybody to think that I'm giving them recommendations or anything like that. But the first thing that we're going to do is we're going to make sure that we've got a reversal or retracement on our hands. I like using the fast MACD with some follow through. When that's present, we're either going to short, right? Because when the market's going down, we like to short. So this thing's going down. We're either going to short 500 shares of stock, and you can adjust that number of shares in lots of 100 based on your portfolio size and your risk appetite, but short 500 shares of stock. And then, or as an alternative, and this would be really good if you've got a cash account, not a margin account where you can't short things. And this is really good for like a retirement account. Retirement accounts are cash accounts. So instead of shorting the 500 stock shares, we could instead go long 5 contracts of these Wendy's January 2023 leap $15 put options. So either one of those is a good way to get into the downward motion of the underlying symbol. And then, of course, we'll put a stop loss order, a conditional exit order, to make sure that if WEN starts to cross back above 2450, then we, cut our risks. And then we're going to wait. We're going to let WEN have some time go by, let it go down a little bit. So if you take a look here, we're just about at the perfect time for that to happen today. So we're going to be looking at doing just that today and then allowing it to go down. And here's the next step. The next step is once it's gone down a little bit, we're going to sell our premium. In our case, we're going to use some Wendy's February 18th $20 puts. And we're going to buy some protection. In this case, we're going to go out to August. So Wendy's August $25 calls. And now we've set up a trade zone, and this thing's just going to profit as time passes by. We just wait for the expiration, wait for the opposite reversal. The step 3 is getting rid of that protective trade, and we're going to be in the money. So we're going to be following this really carefully because as of right now, like today's trading session, I don't even think I'm going to wait till Monday. We're in the perfect time to sell some of this Wendy's stock, short it, or buy some of that back month option.